Hey everyone, welcome back. Today we're diving deep into one of the biggest pieces of tax legislation in recent years. Yes, it is the one big beautiful bill, the one we have all heard about, and it officially became law on July 4th, 2025. Yes, which is coincidental, but sure enough a patriotic day to sign such a landmark law. Look, this bill is shaping to be the most sweeping tax legislation since the Tax Cuts and Jobs Act back in 2017. It's going to affect millions of Americans and businesses in a big way, and it's going to affect you too. So today, I'm going to walk you through the key parts so you can start thinking about how it impacts your taxes, your savings, and most importantly, your financial plan moving forward. I'm Andrew Nida here at Asset Management Group. And before we dive in, take some time to subscribe to our channel so you don't miss the latest updates on finance and our upcoming videos that are extremely educational for you on the One Big Beautiful Bill. All right, let's jump in. Let's start with a simple question. What is the One Big Beautiful Bill? This legislation, formally titled the One Big Beautiful Bill Act, was strongly championed by Republicans as a tool to reinforce President Donald Trump's economic agenda. It combines major tax reforms, spending cuts, enhancements to border security, and then goes all the way over to shifts to energy policy. One major win makes permanent the individual income tax cuts from the 2017 Tax Cuts and Jobs Act originally put in place by Trump's administration. This was set to expire at the end of 2025, supposed to sunset, they said. This means taxpayers are not going to see their rates snap back in 2026, which definitely will provide relief for millions of Americans. Look, income tax brackets and what that actually is going to mean for you, let me explain it just a little bit. Before the 2017 reforms, higher tax brackets kicked in sooner, meaning you just simply paid more to the IRS. And it got steeper quickly. Thanks to the beautiful bill, the current brackets remain in place permanently. So if you're in the 12% bracket today, you're not going to be pushed back up to the 15% tax bracket in 2026, which you may have feared. Likewise, the top rates stay capped at 37% instead of rising all the way back up to 39.6%. This permanence offers stability and should save you and many others thousands of dollars with the IRS every single year. Now, this is a big one. This one was talked a lot about during the run for presidency, and that's tax deductions and tips on overtime pay. Now, here's an interesting change. The bill introduces a temporary above-the-line deduction for tip income, capped at $25,000, as well as giving a deduction on overtime wages. I love this. $12,500 for individuals, $25,000 if you file joint. And this applies to workers earning all the way up to $150,000 as an individual or $300,000 as joint income. And then it's going to go through a phase out above those thresholds. Look, these changes will be in effect until 2028, and they're good, positive changes for the everyday American out there getting overtime and working hard to make ends meet. Now, let's talk a little bit about this odd and different deduction on interest paid for a new vehicle. If you're purchasing a new vehicle, and if you choose to buy a vehicle that's assembled in the U.S., this bill allows you to deduct up to $10,000 in loan interest. Now, that's only going to be the case if your income is below $100,000 as a single filer or $200,000 as a joint filer. And this is only going to last through 2028. But it could definitely make buying American-made vehicles an incentive and reasonable for most individuals like you and I. Definitely going to save you some money. Now, this is a big one. The whole state and local tax deduction changes. I did not like the original change back in 2017, so I'm thankful that we're making some edits to that. Good news for homeowners in high tax states. The bill temporarily raises the SALT deduction cap from $10,000 to $40,000 for taxpayers earning less than $500,000 annually. If your income exceeds that, the additional deduction phases down. But importantly, it never falls below the original $10,000, which we've seen for the last several years. Keep in mind, this is only going to go through 2029 and will plan to revert back in 2030 if it's not extended at that time. Now, child tax credits get a boost, and I'm talking about a credit, not a deduction. Major difference. The child tax credit stays at $2,000 per child. Huge for young families raising children. Here's the kicker. The big, beautiful bill makes this amount permanent, as it should be, and it's inflation adjusted, currently increasing slightly to $2,200 in year 2025. Look, the cost of raising kids isn't cheap. That deduction or that credit is huge. Now, eligibility still requires at least one parent to have a valid Social Security number, and the credit phases out for single filers that earn above $200,000, and if you're married, earning more than $400,000. Nonetheless, it's going to create a lot of savings for families out there today. Now, let's move on to standard deduction and seniors additional deduction. A little bit different than what we hoped for, but nonetheless a benefit. Remember, the standard deduction bumped from 2017. The bill locks it in permanently instead of worrying about the sunset, and it actually raises slightly for 2025. For single filers, the standard deduction is $15,750 and $31,500 for married couples filing joint. Look, no longer do we have to itemize. That's kind of been the story most of us have experienced over the last 4 years. And for seniors, there's a new additional deduction, $6,000 per individual age 65 or older, or $12,000 for couples, applicable to those with incomes below certain thresholds. That's $75,000 for single filers, $150,000 for couples. And this is a temporary law, but nonetheless, a huge benefit for seniors on Medicare and on Social Security. Now, let me introduce a new one for you. This is the Trump accounts for kids. Never had this one before, nonetheless, seems pretty unique. Here's one to watch for with young families. This bill creates the so-called Trump accounts, a new type of children's savings plan. The government seeds these accounts with a $1,000 deposit at birth, basically when they get their Social Security number. You're automatically enrolled with the birth records. Parents can contribute up to $5,000 a year on top of the $1,000 seed, and the funds are invested in a diversified index fund and grow tax deferred until the child reaches the age of 18. Now, when children can use the money they can use it for education, they can use it for buying a home, or they can even use it for starting a small business. Withdrawals for any other purposes before age 30 face penalties and ordinary income tax, but qualified withdrawals enjoy preferential long-term capital gain rates. A great incentive for a young child being born now to have a nice sum of money to help kickstart their career in their future. Now, estate tax exemption, this has been raised permanently. There was a lot of fear surrounding the whole estate tax bumping back to where it was pre-2017. And for estate planning, this bill makes permanent the exemption of $15 million per individual. And this is going to be indexed as well for inflation. Look, this dramatically reduces the number of estates subject to federal estate tax, allowing wealth to be transferred more tax efficiently, really creating a lot of tax strategy out there available for even the everyday American. Let's jump to one that's been somewhat of a negative news headline, if you will. All right, not all news is positive, I guess, and this is the rollback of the clean energy credits. Now, with this Inflation Reduction Act, clean energy tax credits, including those for solar panel installations and EV vehicles, they all expire after 2025. For example, the much beloved $7,500 electric vehicle tax credit, saving individuals literally $7,500 in their taxes, ends September 2025. So if you're eyeing an EV purchase, well, you may want to act rather quickly by the time you watch this video, or you lose access to the credit. Big business and bonus depreciation. Listen, if you're a business owner out there, this is huge for you. For business owners, to me, it's a game changer. The permanent return of 100% bonus depreciation on qualified capital investments made after January 19th, 2025. Yeah, you heard me. It's going back to the start of this year. Rather than depreciating assets like machinery or vehicles over a long period of time, businesses can now fully expense them in the first year, boosting cash flow, reducing tax liability, and incentivizing our leadership of these businesses to reinvest, employ, and continue to grow. Another one is this research and development and QBI deduction. The bill also reinstates immediate expense of domestic research and development costs through 2029. That means, look, if you're focused on growing your business and you're trying to be innovative, new technology, new processes, it's going to make it easier and more attractive for you to invest in your innovation that's necessary for you to continue to grow your company. And for pass-through businesses, sole proprietorships, partnerships, S corporations, the 20% QBI, qualified business income deduction, is now permanent. This deduction can meaningfully reduce taxable income for entrepreneurs all over the country. A huge win for small business. Healthcare and Medicare spending cuts. This has been a hot topic for sure. On the spending side, the bill tightens eligibility for Medicaid and the Supplemental Nutrition Assistance Program, as we know, SNAP, saving nearly $1 trillion over a decade. Stricter work requirements, administration cost sharing with states are part of this. There's been a lot of people frustrated with this spending cut. Nonetheless, it's in here and it's in the big, beautiful bill. Talking about border security, military, and infrastructure, massive funding has been dedicated to these sources. It ramps up border security, including $46.5 billion for border barriers and hiring thousands of new immigration officers. Military budgets also grow substantially, funding missile defense, shipbuilding, nuclear capabilities. In aviation, $12.5 billion is allocated to modernize air traffic systems and boost infrastructure. I don't know a whole lot in granular detail about those areas, but it seems like it's a good thing to invest in the technology that we use as we operate our country and our society here. Now, the debt ceiling and the economic outlook. Look, this bill raises the debt limit by $5 trillion, higher than initially proposed, to prevent financial defaults and risk, and not a lot of people are happy about that. Now, while it adds approximately $4 to $5 trillion to the federal deficit over the next decade, it does aim to stimulate growth projected by the Tax Foundation to boost GDP by 1.2%. Creates nearly a million new jobs and increase wages somewhere around 4%. Now, political reactions and what's been left out. Now, supporters tout the bill's economic security benefits, while, of course, opponents that criticize cuts to Medicaid and SNAP. Notably, the bill does not eliminate taxes on Social Security benefits, which so many of us wanted and President Donald Trump had promised. Nor does it reduce the corporate tax rate below the existing 21%, which would have made entity structure design a bit more interesting. That said, the truth is the one big beautiful bill makes permanent tax relief for everyday Americans and small business. It creates new saving opportunities, spending cuts, and policy shifts that's going to affect every one of us. Now, I'm interested in what's your take. Are you excited about the tax extensions and provisions? Or are you worried about some of these cutbacks and the long-term impact on our economy? Drop your thoughts in the comments below. And more importantly, thanks for watching. Don't forget to like this video and subscribe to our channel if you find it helpful. And of course, I'll see you in the next video.